Right now, I'm holding a long position, and at the same time, I'm making money from a short position. Yes, long and short, at the same time. Do you know how that's possible? A system that automatically enters trades when a specific price is broken. A system that even takes profit for you while you're asleep. Sounds complicated? Here's the truth. Most people open an exchange and feel overwhelmed immediately. Too many buttons, endless numbers, and no idea where to even start. So today, we're going to slow things down. Really slow. Watch this video until the end, and you'll already be one step ahead of most people. Let me walk you through how futures trading actually works, step by step. When you enter the website, you'll see the top menu. Click on Trade. You'll see two options, Spot and Futures. Spot trading is simple. You buy an asset and later you sell it. That's it. But futures trading is different, and that's what we're focusing on today. When you enter the futures section, you'll see several markets. The most commonly used one is the market calculated in US dollars. Why does this matter? Simple. It makes it much easier to understand how much you're making or losing. No confusion. Select Bitcoin and the chart opens. Before we go further, take a breath. The screen looks complicated, but the structure is actually very clear. On the left, you have the price chart. In the center, the live order book. And on the right, the trading panel. This right panel is where everything happens. Leverage, position size, and actual entry. This is the control center. You'll see two buttons here, long and short. Long makes money when price goes up. Short makes money when price goes down. That's the main reason people trade futures. But before entering a trade, there's one thing you absolutely need to understand. Margin mode. At the top of the screen, you'll see Isolated and Cross. Isolated mode means only the money you put into that trade is at risk. For example, if you enter with $1,000, the maximum you can lose is that $1,000. The rest of your balance is untouched. Cross mode is different. It uses your entire account as collateral. Your position has more room to survive, but if the market moves hard against you, everything can be wiped out. For most people, especially if you're not a full-time trader, isolated mode is the smarter choice. One mistake won't destroy everything. Now let's talk about leverage. Right below the margin setting, you'll see the leverage control. Leverage increases your position size. At 10 times leverage, a 1% price move means a 10% gain or loss. At 50 times, that becomes 50%. At 100 times leverage, a 1% move in the wrong direction, liquidation, game over. With 20 times, you roughly have a 5% buffer. With 10 times, about 10%. If you're a beginner, use low leverage. Not because it's boring, but because survival matters more. Low leverage first. Learn first. Speed comes later. Now let's place an actual order. You have three main order types: limit, market, and conditional orders. A limit order lets you choose your price. No rush, you wait. A market order executes immediately at the current price. It's fast, but fees are higher. And this is where most people miss something critical. Fees are not calculated based on the money you deposit. They're calculated based on the full position size. The higher the leverage, the bigger the fee. And those fees add up fast. Most people don't realize this, and their account slowly melts. Let's do simple math. You trade $1,000 with 100 times leverage. That means you're actually trading $100,000. Fees are charged on $100,000. One trade, $100 in fees. Trade 10 times and your entire capital is gone, just from fees. That's why high leverage is high risk, high return. Never forget that. There is a way to reduce fees. If you sign up normally, exchanges give you nothing. But if you join through a referral link, you can get 20 to 30% of your trading fees back every week. It's called cash back, and it's bigger than most people think. I'll leave the link in the description below. Make sure you use it. Now, conditional orders. This is a powerful tool. You set conditions in advance, and the system only enters the trade when price reaches that level. You don't need to stare at charts all day. Set the rules, and the system does the work. Set one order at the top of a range and one at the bottom. Breaks upward, automatic buy. Breaks downward, automatic sell. Even while you're asleep, the system enters for you. This alone reduces emotional mistakes by a lot. Before entering any trade, always set TP and SL. Take profit, stop loss. They automatically lock in gains or limit losses. You'll see exactly how much you can make and how much you can lose. This is not optional, it's mandatory. Once a position is open, you'll see information at the bottom. Entry price, current price, unrealized P&L, liquidation price. Starting slightly negative is normal. That's the fee. And remember, I already showed you how to reduce that. When closing a position, you can close part of it or all of it. Before you click confirm, always double check the quantity. Most mistakes happen right here. If you followed everything so far, you now understand the full flow of futures trading. Now let's talk about something only experienced traders use: holding long and short at the same time. This is actually easier than it sounds. You just change one setting. Click the settings icon at the top right. Under Trade Mode, change Position Mode to Hedge Mode. That's it. You'll notice the trading panel changes. Before, you used the Short button to close a long. Now, Open is only for opening positions. Close is only for closing them. This is where many people get confused and make mistakes. So let's open both positions, long and short, at the same time. At the bottom, you'll see limit and market options for each side. Use those to manage positions cleanly without mistakes. So, how does it feel now? Feels more manageable, right? For deposit methods and additional features, check the comments below. Now go and make money.